The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to keep you abreast of what's happening in taxes. I'm going to tell you, when you take a look at the inflation rate, the gas prices, what's happening in the world, you want to make sure you have every penny that you can get so that you can give it to the gas company, But anyway, no, certainly, we want to help you. I'm Esther Gulius, the Tax Lady from EG Tax, and I got Chris Fabian in studio with me. Hey, Chris.
Hello, Esther.
Hello, Christopher. Okay, so today we wanted to talk about, because we're kind of marching through the tax return. And again, you can talk about anything tax related. 8030930, 8030930, star 930 on a cell phone. So you can text us at 716-8030930. We certainly want to help you. And but we kind of wanted to talk about rental property today because there's a lot of rental properties in Western New York. And I think a lot of people don't understand that. In order to take the expenses for rental property, your rental property has to be handled like a business. So you have to have a profit motive, right, Chris?
Right. You gotta want to make money. I know that sounds weird, but imagine that. In order to claim a loss, you gotta want to make money.
Or
you can't
even just
want to
take,
lose
or just
money.
even just take the expenses.
Right.
You have to have a profit motive. So if you have your kid living upstairs from you and you're not renting at fair rental value, then guess who can't take the expenses for that upstairs unit? That doesn't mean the property taxes and mortgage interest aren't deductible, but those other things wouldn't.
Right.
And so we want to kind of talk about that. So if you have rental property and you're wondering about, does it qualify for the qualified business deduction, things of that nature? What if you have a vacation property and you use it yourself in the summertime for part of the time? Can you deduct it? What if you make more than $150,000? What if you sell it? All those kind of things we want to help you with today. But again, we want to talk to you. So let's go right to the phones and we're going to talk to John. Hey, John, how can we help you, sir?
Oh, thanks for taking my call. Yeah, I just had a question. I do this very easy to do the federal. I did 2 part-time jobs here, and I was in Florida for 4 months, and I ended up getting 2 W-2s from. I was just working over at collecting tickets and stuff and that. My question is on the state tax. There's no state tax in Florida, and then when I enter my information, that you got to put down the federal income. How do I exclude the?
You don't exclude it. If you were a New York State resident who went down to Florida for a period of time and you did not change residency, you just went down there and you weren't sure, you were still a New York State resident planning on coming back, then all income earned all over is taxable to you on your New York State return. Now, if you had gone to a state that had withheld taxes and you did a tax return for the other state like Pennsylvania or Ohio,
Right.
then you would get a credit on your New York State return using the Form 112R. In your situation, there is no credit and it's going to be fully taxable to New York State. Right, Chris?
Oh,
Right.
Okay, yeah. Because I made about 3,500, maybe 3,300 without. Okay, so I probably still may not. So I'll just lose a couple bucks out of the state tax that I probably.
That's right. I mean, you just have because the federal transfers directly over to the state, and there is no subtraction for out-of-state income. The only thing that you get is a credit called it's a New York State 112R it's a resident tax return credit for taxes paid to another state, and that's what you would get. But Florida has no taxes, so you didn't pay taxes.
Okay, well, I appreciate that information.
Now,
All right.
Wait, John, real fast. What is your other income besides these 2 part-time jobs in Social Security?
Well, I had two part-time jobs here that I only made 7,000 or 8,000. So
Okay, so no pension?
I have a small pension, and I didn't have any tax taken out on that. But I mean,
But that's that. How old are you?
Social Security I don't pay. Well, I'm 71. I don't pay any. You know, the Social Security is free.
Okay, but your pension is tax free on the New York State return. Did you take it as a subtraction?
Yeah, yes, I have over the years. Yeah, I have. Yeah, my income is pretty. It usually comes out to nothing, but I just noticed when I went.
Okay, well, Chris is hitting on something he wants to talk to you about.
Yeah, you may, because you do it yourself, you may not know this. You may be eligible for the earned income credit on the federal because they really expanded it, and you could be maybe getting a credit of $800 or $1,000 from the federal.
Right.
Oh, okay. I'll have to
Because
it.
when you have lower income and you have wages, then even though you don't have children in your home, it used to be it was only benefiting mostly people with children. Now they've expanded it to people without children living in their homes. And as long as they have wages and your income's relatively modest, and that's what it sounds like in your situation, then you might qualify for the earned income credit. So that could the federal would be a bounty for you, and then you just owe the state of New York for their share.
Okay, well, I'll take a look at that. Or
But one other thing, do you happen to have property?
no.
Okay, all right, because I was thinking about
home,
the
it's paid.
New York 229.
Yeah, no, I have a home, but you know,
Well, is your home sitting on land?
Oh yeah, I live. Yeah.
All right, so do you pay property taxes?
Yes.
Okay, how much are your property taxes?
I only pay. I get the veterans credit and stuff, so I only pay about 3,000.
Okay, but if you have low income, there's also a brand new credit on the state of New York. It's NY 229, and if your taxes are more than 6% of your income, which it sounds like it is, you could get a credit from $250 to $350 on the state of New York. So that's really a boon for you as well.
Oh, I might have to come in and see you guys. This is all.
I was just going to say your best bet would probably be to come in because you could miss out on a whole bunch of money.
You know, and sometimes the simplest tax return is the one with the most credits. It's remarkable. And that's how they had it established. They wanted to make sure people that were on the lower income stream were people that were going to qualify for a lot of these credits. And it sounds like you might be one of those.
Well, I appreciate that. And
All right, John?
What's your number again?
We're at 632-7886. 632-7886. We're on 1890 Colvin, our corporate headquarters, 1890 Colvin in Tonawanda. You can just walk right over.
Okay, thank you very much. Stay safe.
Thanks, John.
Okay.
Thanks for calling. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I wanted to... do we have any texts here?
No,
no text.
Really.
Okay. I don't want to get to our other callers until on the other side of the break, so I think I'm going to take the break now. And your phone calls on the other side, 8030930, 8030930, star 930 on a cell phone. I'm Esther Gulius, the tax lady from EG Tax. See you on the other side. Hey, to us, you are family. I'm Esther Gulius, the tax lady, here in the tax corner, trying to help you with your taxes. All of our offices are open from 9 to 9, Monday through Friday, 9 to 5 on Saturday. Several of our smaller outlying offices would have restrictive hours, but mostly all of our offices are there to help you. And if you have tax questions, you get to talk to somebody on the phone. And the IRS is even answering questions, are they, Chris?
Well, they're trying to.
with no staff. All right, let's go to Mike, 8030930, 8030930, star 930 on a cell phone. Hey, Mike, how can we help you?
How you doing, Esther?
Good. What's new?
I got one you never heard of, and that's because...
Okay, I can't wait. What do you got?
All right, back tax year. Had it sent in manually, the mail, return receipt, etc.
I gotcha.
And wasn't sure what was coming up in a couple years after, so I had them push the return towards the next year. Just got a letter from them Friday, And they said, we can't. And what I did was the year after that, I actually had it sent in electronically. And they said, because we already did your next year return and it's finished, we can't put that towards there. So they're sending a check.
Well,
Now,
good for you. At least you're getting the money.
well, I'm getting the money, but if I run short,
But here's the thing, Mike.
I'm not going
You
to.
don't want to make it too complicated with the IRS. You want to keep it simple, stupid. You know what I mean? You just want to send in your return, make it clear, do the right form, send it electronically, make sure that all the information that you're putting on the return is correct, because you cannot rely on the fact that people are going to hand process these returns and have them be the way you want them to be. I have to tell you, I've been doing taxes returns since they're the Pony Express, you know. Used to be the Internal Revenue Service just had more staff than they do now, and everything's electronic. And if you're getting your money back, hallelujah.
But now, Mike, did you, on your next year's return, you probably put on there that you were applying the refund from the prior year, correct?
Right. So I'll have
Did you?
$190 only that'll be transferred, and they haven't sent a letter that they changed that next year return.
Okay, did you owe money or did you have a refund coming back from the next year return?
I'll have 190 coming back only.
No, the next year you had extra 100, you had a refund of 190,
And
that included that payment that you had kept forward?
I was going to push it again because I'm not sure. I ended up on a disability income, and sometimes I can't get all this stuff sorted out and taken.
Yeah, but you know what, Mike? Just get the money, get it all ironed out. Don't make it complicated. Don't apply it to next year unless you're absolutely correct that it should go to next year, because at some point in time you have to do the accounting to make sure it's correct. So one of the best things I've heard is that you're going to get a check that eliminates that, what you call pushing it forward. If I were you, I would get all my ducks in a row, stop doing your estimates from applying a previous year's credit, because you may not have the credit, like Chris is alluding to. Maybe that was part of the money they're sending back to you. So you could be tricking yourself into thinking you got a credit that you don't have.
Well, actually, I did count on that credit on that year, and I was going to push it forward because I know coming forward after that.
Yeah, well, you got to back it away from that year now. So,
Because they're sending the money back.
yep. So you may end up owing
Yep.
that money now.
I just think you need to get your accounting straight, Mike,
So I may end up owing money, and
because they're sending you the money back that you have on a tax return that you said apply to my next year's estimate.
right. So there's no way around it. They're not nice.
No, sir.
Oh,
Not-
Lordy.
you just got to get your accounting straight, and I would keep it. I would make sure that I don't apply money that I don't know I have, because that's not going to help you.
Well,
Okay?
they did have it. Shouldn't have done it electronically, I guess.
Oh, Mike.
All right.
Mike.
Thank you.
I love you. Bye, Mike.
Okay. Bye-bye.
Thanks for calling. No, it isn't that did it electronically. It's that he did it by paper, which made it slowed up. And so what can you do? Anyway, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Yeah, Chris, what do we got?
I sold a rental property in Buffalo. I filed a 1035 exchange, and
How
I
about a
am
1031? But anyway.
probably a 1031. I'm purchasing rental property in Florida for a higher cost. Can I use the portion of the proceeds towards closing costs of Florida property?
If you really did a 1031, that means that you cannot touch the money. Any money that you touch, that you
was
get
supposed-
outside of the 1031 is taxable.
Right.
So can you? Yeah, you can use it, but it kind of defeats the purpose of the 1031.
Right. So, like Esther said, if you got the money, you may not have done a 1031
That's
exchange.
right. Maybe you just think you did. A 1031 means you took property here and you are exchanging it for other investment property here for investment property locally or out of the area, and in order for the 1031 to be effective in the way you really want it to be, you cannot touch the funds, because if you do, that is going to be taxable.
Right, and you have to use a licensed mediator, not
Correct.
just a real estate agent, a
Right.
licensed mediator who would handle all the funds.
But the idea is absolutely great. I mean, if you're somebody that has rental property in Western New York and you're trying to sell it and you're thinking, I'm going to cash in on all this money, a great way to alleviate the gain is to do a 1031 exchange if you want to stay in the rental business,
Yep,
right?
exactly.
Okay, and there was a question about lead-based paint here that we had. Lead-based paint removal for if you have a child in your home that is been affected by lead-based paint poisoning, that would be a medical expense. They asked if it was deductible. All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And let's go to Paul in Amherst. Hi, Paul. How can we help you?
Hi, I've got my home sits on some acreage, and I've got a neighbor who wants to purchase a parcel of it that's adjacent to his, and I was wondering what the tax ramifications, if any, would be.
Okay. Well, you're going to have to.
It isn't going to be, if any. It's going to be.
There's going to be some. How long ago did you buy your property?
16 years ago.
Yeah. So
when you have it parceled off, I'm assuming you're going to have a survey done. That portion of the property is going to be a long-term capital gain, and because you're not selling your personal residence, you're actually subdividing the property. So you have to go back and figure out the basis in your property when you first bought the piece of your home, including that parcel that you're going to be subdividing, and the expenses to have it subdivided, like the survey, and et cetera, et cetera. Then you're going to subtract that from the price of the property that you're selling. I'm assuming there's no realtor, and that's going to be your gain or loss. The maximum you're going to pay is 20%, and if your income is low enough, you might not pay anything, right?
right.
Yeah.
Okay.
Right now is low because I'm on Social Security, so it's
Well, there you go. So how much are you selling it for, Paul?
about $100,000.
Good
Well,
for you.
That would trigger
You're going to end up paying more like
15%. You may want to do installment payment over 5 years, and this way it keeps your income down, or even 3 years.
Right.
Keeps you in a lower tax bracket, which means
And
you
you
would
know the
pay
neighbor, right? He's not going to go anywhere unless he picks up his house and takes it someplace.
No, he's not going anywhere.
So what Chris is suggesting is an installment sale
Right.
Right.
where you act as a bank.
Yeah, that's what I was saying. Is basically I'd be carrying a mortgage.
Right, so you get the interest that'll be fully taxable, but then you have the long-term capital gain for each year. So if your gain, let's say, is $20,000 a year because your basis is 20, then you basically are going to beat the tax man completely.
Right.
Well, it sounds like a plan.
All right, Paul, if you need any help, give us a jingle, okay?
Thank you, Esther.
All right, thanks, Paul. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Getting back to rental property, because that's kind of what we wanted to talk about today. Oh, and by the way, what is Tuesday? Tuesday is a big day.
Tuesday is a big day. It means 1 month left to file. No, it is deadline day for corporations and partnerships. So if you have an S corp or a partnership, you have to have your return in or an extension done by midnight in order to get it registered
Or
as
else
filing and on
you could
time.
have penalties and interest.
Up
and
to
you certainly don't
100.
want that.
Yeah, penalty on a partnership or an S corp filing late is $199 per partner or shareholder per month. So if you have a partnership with 3 people, you're looking at a $600 penalty.
Right, and all because you're late. So again, partnership and corporation S corp and full C corp deadlines are if your calendar year was going to be this Tuesday, March the 15th, you have to either get those tax returns in or file an extension.
Right.
Right?
Yes.
Okay, let's go back to the phone. Yeah, okay. We got Charlie. Hey, Charlie, how can we help you, sir?
All I want to say is I happened to get home from out of town working and heard Miss Goulias on the phone again. I've known this lady since her work with one of the prominent politicians in Buffalo. That goes back to Horace Billy Johnson. She's been an outstanding tax lady for decades. It's superior, just superior. Continue. You serve this community extremely well, man.
Well, thank you. Thank you for sharing that with us and being a testimony.
Yeah,
we did not pay him to call.
Absolutely, absolutely not. But thank you so much. That's very kind of you. And that's my brother, Charlie. Hey, Charlie, thanks a lot for calling. And we're going to go to Dave in Kenmore. Hey, Dave, how can we help you, sir?
Regarding the New York 229 property tax credit, would I be eligible if I itemize my New York State return?
Yeah, because this is a property tax refund, really. It's based upon your property taxes. So, yeah, you're good. Are you good, Dave?
Oh, yeah. I just wondered if, so I am. I can itemize and take the credit.
Yes, you can.
Hey, thanks so much.
Hey, thanks, Dave.
Bye-bye.
I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, just before we break for news. So if you're somebody with rental property in Buffalo, in order for you to take your expenses, you have to have a profit motive. And the first thing you ought to do is, if you have somebody living in your home and you're giving them a break, you got to really take a look at that and say, I got to raise the rent so that they're up to speed. Otherwise, you can have a problem. So we'll talk about that on the other side. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930. We're taking a break for the news. I'll see you on the other side. Hey, this is the tax lady, Esther Gulius, the tax lady. All of our offices are here to help you. I'm going to tell you, we will figure it out. We certainly want to help you. I'm joined in studio with Chris Fabian, and we were talking about rental properties and how important it is. Make sure that you understand that they don't let you just take expenses on your duplex or fourplex because you want to stuff it full of your children and you're giving them free rent. That doesn't work like that. It has to be a profit motive, and it's important for you to understand that in the event of an audit, you would lose. And the other thing people do is they buy summer homes, and you can actually rent out your cottage and use it personally and still take the expenses, right, Chris?
Right. So if you have a house on Lake Erie, Lake Ontario, one
Florida,
of the Finger Lakes, somewhere, and you rent it out a week at a time, like even at Ellicottville, you have, that could be a rental deduction on your tax return.
That's exactly right. And so you take all the expenses and you have a systematic write-off of the asset called depreciation, and so as a result, many times it makes you not pay taxes. But if your income is over $100,000, there is a kind of a penalty.
Right, you suspend $1 for every $2 you're over the 100,000 till you hit the 150,000, no matter what filing status you are. So once you hit 150, none of your losses are deductible unless you're
a real estate professional.
Right, which means your main job is having rental properties.
Right. So, I mean, those are just some of the things. But I'm going to tell you, if you're somebody that has rental property, you want to make sure that you check your motivation to make sure that you're trying to make a profit, and check with us with the laws, because if you do have a cottage, you can use the cottage up to 10% of the time it's rented, or 14 days, whichever is more, and have it retain its business nature, but you have to allocate your expenses.
Right. Yep.
Okay, why don't we go back to the phones? We got Mike in Tonawanda. Hi, Mike. How can we help you?
Hi, Esther. I have a question. With the COVID enhancements or government payments, whatever, how can I find out if I received any, and can I still claim any for those I didn't get, like a credit or anything?
All right. Well, first of all, if you didn't get the
first two stimulus,
the stimulus due to income, because your income was too high and this year's income drops, you can get it. If you haven't gotten it because maybe you had a baby, like this morning I did a tax return for a lovely couple who had a brand new baby in March. They didn't know about the baby, so they didn't get the stimulus, and they also didn't get the $3,600 child tax credit. So if that's the case, yes, you can get it. The best way to find out if you got the money is look in your bank account, don't you think, Chris?
Right. Yeah, go back till around March of 2021. It's usually around St. Patty's Day, and you look for IRS EIP 3.
Okay? And so I just had a client the other day who swore to me. He said, Esther, I did not get that money. Okay? I said, all right, if you didn't get it, we're going to put it on your tax return. Bear in mind, if you did get it, it's going to hold up your refund like 6 months while they manually check it. And within an hour, he calls and said, oh, you know what? I did get it. You know, because most people did get it, unless you didn't get it because your income was too high or you had a brand new baby. Right. Or maybe the child last year wasn't on your tax return for some reason, and this year the child is. So, and they didn't get it. So there's always a possibility, but yes, you can get it if you didn't get it.
Okay.
Okay, Mike?
And what happens about a late filing on something like that if I didn't file that year?
Well,
did you get the $1,400? They were sending it out if they knew about you, like you were getting Social Security or you had filed in the past, they were sending it out. But if you did not get it, you can get it.
Oh, okay. Thank you very much.
Okay, thank you. I hope that helped them.
Yeah.
Anyway, I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. What do we got here?
Parents claimed child in 2020, therefore received $1,400 for a child in 2021. Child works full-time and provides 100% of their own support. Can adult child claim the stimulus of $1,400 on her 2020 return, even though the parents received the $1,400? So
not really. I mean, if the $1,400 was received by the parents, then it would be unethical, in my opinion, for somebody to go ahead and claim it if the child has already paid the stimulus in 2021.
Mm-hmm. Right, right.
Okay, and then let's go back to the phones and we'll talk to Brian. Hi, Brian.
Hi, good afternoon.
Hi.
Last year, I purchased about 50 acres of land in Cattaraugus County that is zoned agricultural, and I'm just using it for recreation, but I'm wondering if there's any, what the tax ramifications are moving forward.
In what way?
Well, can I take advantage of anything? Like if I, grew something up?
Okay, so anytime anybody does any kind of a purchase with a profit motive, okay, and is buying it for investment, for instance, and not using it personally, like if you bought this land in Cattaraugus as an investment, then once you hold it for over a year, it's a long-term capital gain, and you'd be able to take the lower advantage of the lower tax rates. You can also put a pole barn on it, and if you start renting out stalls for horses, then it becomes a business. Maybe you want to start farming on it, and you have a profit motive. Then you'd have a farm return. But again, everything has to stem from the fact that this is something to make money, that you're not just doing this to look for a tax sham.
Yeah, otherwise the only thing you could do is use the property taxes as part of your itemized deductions.
Right.
Okay.
Okay, Brian?
All right, thank you very much.
All right, thank you, Brian. I will tell you, I mean, there are all kinds of people who can make money out of nothing. And so they might have bought that piece of property like Brian did, and they're farming it. They're doing vineyards for a winery. There's all kinds of things that you can do, but the bottom line is it has to be for profit.
Right.
That's the IRS. When people say to me, my friends say I should start a corporation because then I can write off my cars and my food and everything. And that's not the way it works. If you were to get audited and they find out that you're writing off all of your personal expenses, you're going to lose and probably do some time someplace that you don't want to go.
You know what's interesting is rent has gone through the roof.
Yep.
So, we talk about fair rental value all the time. What happens to the landlord that has this tenant, and they've gone up $50 a month, we'll say, every year. So now they're charging $750. But because the rents have gone crazy, everybody else in the neighborhood's getting $1,000 or $2,000. Do they all of a sudden not get to claim their losses?
Well, I mean, you really if you have to really evaluate the fair rental value because that's the law.
Yeah.
It's got to be fair rental
crazy.
value.
Think about
But
that,
many
though.
times you see people that said, well, this person's been in my house for 30 years
Right.
and I really love them and I give them a break on the rent and that's
that
just
doesn't
not
count.
It just doesn't count. The other thing is like we were talking about being a real estate professional. When you're a real estate professional, the loss that would not have been deductible because your income exceeded $150,000 would be deductible. And there are several of our clients that I know that have multiple units, and that's what they are, real estate professionals.
Right, and it has to be their main source. It can't be, oh, I'm a teacher, and during the summer I spend all my time. No, your main job is being a teacher.
I also want to tell this story, and I think people don't understand it, that under the present tax law, it used to be that in order for you to get a credit, that the IRS was going to send you money, state of New York was going to send you money, you had to work. But under the present tax law, you don't have to work. When I do that commercial and I said, that a family of four, but I'll give you an example. A non-working person with 4 children, let's say all under the age of 6, would get a refund of $14,400 just by virtue of having children.
Yeah, I know we had somebody yesterday at one of our offices. I got called. I don't want to say which one, but the preparer was just double checking because the taxpayer only had Social Security for themselves and the children, and they were going to get a refund of $10,000.
That's right. And so if you're someone who's listening, and you have children in your home under the age of 19, even though you don't make any money that's taxable, you have refunds coming. That's why that gentleman that called before and said, I have a real simple return, I don't need you. The more simple, the bigger the money that you could be losing.
Yep. Oh,
right?
It's you got to pay 10 tax law. People go, I know what. This is the best $110 I spend in my life because I don't keep up on tax law changes. I don't understand people who do it themselves.
Absolutely. I will tell you, you can save $100, but you just cost yourself $2,000.
Right.
It's just unbelievable because the changes that giving you that example of the parent with 4 kids. If the parent then goes and gets a part-time job, maybe making $10,000, now they get an earned income credit on top of that. So now the refund isn't $14,400, it's like $22,000. And if one of their kids goes to college, then it's like $24,000. It just keeps going up, and you don't have to pay anything into the system. You cannot believe what's out there under tax law. Do I agree with it? I have to tell you, I morally have a problem that they're giving money to people that aren't working.
Yep.
But that's just me. Anyway, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll be back on the other side. Hey, I'm Esther Golias, the tax lady from EG Tax. We got over 30 offices around Western New York, Florida, Arizona. We want to help you. Thanks for listening. I'm joined in studio with Chris Fabian. Something that I just did the other day with a client. I was counseling them because they are in debt, but their house is almost paid for. And in the current market conditions, their house is worth like $350,000, but yet their credit card debt, like $75,000 to $80,000, is driving them crazy. So, and plus they ended up under withholding, and so they owe the IRS some money. And I said to them, why don't you sell your house? Because you can sell your house every 2 years, and I know everybody's going, oh my God, then where were they going? I told them to go into an apartment. Because if they sold their house, it's going to be completely tax-free. Because if you sell your house 2 out of every 5 years, that's a completely tax-free transaction if the gain is less than $500,000 on a marriage filing a joint return. They can clean up their deck, get their credit back to where it should be, and at some point in time, I think there's probably going to be a correction in the real estate market, and they can go back into getting a home.
Yeah. Now, could they get a home equity? Did they not?
Their credit's so bad they can't.
Yeah.
Nope. I mean, what'll happen is sometimes in order to keep our holding on to what we like so much, we just let everything else go to hell in a handbasket, and they didn't know what else to do. So they short. So remember when last year they said that you could take money out of your pension plan and spread it out over 3 years?
Yep.
Well, they took $100,000.
Oh.
So this year, $33,000 was on their tax return. And so they ended up owing money, and they have all this credit card debt, and they just don't know what to do. And they had to change their withholding this year, too. So sometimes we have to do what you got to do what you got to do. And one of the best tools that you can get in your tool chest is to look at the asset that you're living in. And because with in this market that we just had, many people's houses went up $150,000, $200,000.
Yeah, I know. I looked on Zillow the other day, and I can't believe what they say my house is worth. It's ridiculous.
You should sell your house.
Sell ours. Yeah, but if you guys have questions, give us a call at 803-0930, 803-0930, or star 930 on your cell phone.
Absolutely. So I just wanted to bring that up because some of the easiest things that you can do is to get rid of your house. And I know the realtors all over Western New York would love for you to give them a call and list it. But when you take a look at the gas prices and the possibility of a market correction because of the rising of interest rates and the war over in Ukraine, you don't know when the bottom might drop out of the housing market, so this might be a great opportunity to do that.
Yep.
Okay, let's talk about what if you have a piece of property that you're using personally. How do you handle that, Chris? And you're renting it out. Like, let's say that you have your cottage and you're using it personally. How do you allocate those expenses?
Well, you got to take the percentage of personal use against overall rental, including yours. And if that's less than 10%, you get to use the whole allocation. If it's more, you have to allocate it. If you're using a 20% personal, you have to allocate the property taxes, the mortgage interest, the water bill, the utilities, and you're not allowed to claim the loss. So you got to be very careful when you're using it.
But you can take the expenses up to
offset
the
income.
Right.
So,
and that's part of and again, we have some really great record keeping books for those people that have rental property. You want to stop to any of our offices. We have some great rental books to help you keep track of your expenses. But the first thing I'd suggest you do is make sure that your rents are up to date of what they should be. Make sure that you have a profit motive and keep good track of your records. And many of you with multiple units, make sure you do a separate bank account for some of these, because then you would qualify for the QBI, right?
Right. It has to be strictly your investment, your true profit motive, and you can get a QBI up to 20, which is 20% of your net profit.
Right. So the qualified business income, if there is a profit motive, then you get to take that 20% as a subtraction over and above your standard deduction or personal exemption, right?
Right.
All right, let's go with our phone calls. We'll go back to James. Hey, James, how can we help you?
Hi, Esther. Question. To me, it seems dumb, but I'm going to ask it anyway. I've heard you talking about people who aren't working can get some kind of a credit.
Yes.
I'm retired, and I only have Social Security income, which is very low. Is there anything I can get?
All right, so people with children under the age of 19 are going to get a refund even though they didn't work or paid in no taxes. Unfortunately, people in your situation have to go to work. And you don't have to go to work full time. if you're in your situation with only Social Security, even if you had a small part-time job making $2,000 or $3,000, you would get an earned income credit. But without working, you get nothing.
Or do you own your home?
Oh, good point, Chris.
No, I mean
You rent?
living housing.
Okay.
Okay.
Yeah. What Chris was getting at is the New York 229. For anyone that's listening, if you have not had to file a tax return for years and years and years, but you're a homeowner, what should they do?
Well, then you get the credit. You got to
get that
file.
credit
You can,
on New York State.
But Jim, do you pay less than $450 a month in rent?
Yes.
And is your Social Security under 18,000?
Oh, way under. It's only like 10.
So you may be entitled
That's right.
to the old credit that nobody's talking
That's
about
right.
anymore.
IT 214.
Oh, there's it. Oh,
So there is a renter's credit, the old renter's credit, which can get you some money as well. So if you might be able to get the homeowner's credit with the that are for people that are paying property taxes, but you might be able to get the IT 214, which would be a nice credit, and he could get it for the last 3 years, right?
Yep.
Oh, then I'll have to come in and see you.
Well, there you go. All right, Jim. Thanks for calling.
Thank you. Bye-bye.
I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You know, sometimes there's just so many angles that you can take a look at something, right?
Yeah, it's like playing billiards.
It's
Playing,
absolutely like playing billiards. Now, don't forget, 1 month from, well, actually 1 month and 3 days from Tuesday is tax deadline, and they aren't extending it, are they, Chris? Tell me the
Praise God, no.
They're not extending it. They've extended it all those years, but they are not extending it. The other thing another tool in your toolbox, for those of you that worked and didn't have pensions, or your income is lower and you would like to increase your refund or decrease your liability, use the IRA.
Right. I mean, I had somebody the other day the wife worked, he's on disability, and they have 3 children. And by putting in $7,000 in an IRA, their refund went up $5,400.
Yeah, it's
so
unbelievable.
Really,
and then you get the renters, the pension savers credit.
Right. So it would only have cost him $1,600 of his own money to put in $7,000 into his retirement.
It is remarkable. It's just remarkable. And you can also use your, if you have a high deductible plan, you can also not only contribute to your IRA, you can also contribute to your HSA, right?
Right.
Okay, we have somebody that said any.
No, we're not.
No, we're not. Okay, all right.
Yeah. But, I mean, we got to, There
was somebody that said something unkind about my clients that got themselves into
a lot of
financial
trouble.
debts. And I will tell you, when you take a look like we do at people's situation, there are all kinds of ways that people make bad decisions. And I feel like our job is to make sure that we help them to unscrew the spaghetti.
Right, we just don't do taxes.
That's right. Because we really do. We try to say, okay, so here you are, but here's a way to get out from under.
Right.
And you certainly wouldn't
And you know what?
say that they were bad people.
People's things happen in life, and it's the snowball effect. You start off going, I needed
Well, like last year, they needed the $100,000.
Right.
Right. So they took it out, and we spread it out over 3 years. We did that 89-15 option, and now here it is, year 2, $33,000. Now it starts to hurt.
Yep. I mean, they could have lost a job.
Right.
I mean, the texter doesn't know that if this person could have lost a job and
Right.
they could have had a nice job.
But here's the thing. It isn't about where you were, it's where you're going.
Yep.
And so to continue to do what you're doing, you're going to continue to get what you got.
Right.
So in order to change and move forward, you have to change what you're doing. And change for some people is just daunting. But I will tell you, if you take a look at some of the things that we've been talking about, putting money in your pension plan, thinking about maybe selling your house or maybe one of the other assets you have. Many people are collectors. They might be collecting cars. You sell them.
Right. if you need money, you got to sell what you have to sell.
Absolutely. And really, as we're taking a look at mortgaging in order to fill up your gas tank, there are, people that are good at budgeting. That's a great thing. But if you're not so good at budgeting, you kind of got to change the way you're doing.
Right. And, we try to help plan with everything. I know I had a client the other day putting more money in their 401ks at work so their income falls under 125 because their daughter's going to start college soon.
Right.
So they fall into the Excelsior
Absolutely.
program.
And that's another thing you have to think of. As life moves on, it's like a river. At one point in time, you have this, then you move on, then that, and getting ready for college is another thing altogether.
Right.
Right?
Yep.
Well, anyway, and I guess I'm losing my voice. I'm Esther Gilius, the tax lady from EG Tax. You can contact us through our website at egtax.com. You can call any of our offices. If you go to egtax.com, all of our offices are located online there, and our phone numbers, and we have real people to talk to you. But more than anything, if you are sitting around this weekend on Sunday getting your stuff together, think about letting EG Tax help you, because we not only are good at what we do, but we really care about you.
Right. Yep.
Okay. Until next week, I'm Esther Gilius, the tax lady from EG Tax with Chris Fabian, egtax.com. Hey, thanks for listening. Have a great weekend. Bundle up.